Hello everyone, this is Evan here from the Trade Risk on Wednesday, June 29th with a market recap video. In this video, we're going to spend just time looking at the current market environment and also a few of the other majors. I am actually traveling on the road today. I am in a hotel outside of San Francisco, and I actually have no idea if this Wi-Fi at this hotel is going to be able to upload this video. So for that reason, I'm keeping things really brief and just going over some of the major markets here. But I did want to get an update out because I haven't been able to post too much recently. So let's just jump right into it. S&P 500 SPY ETF closed up 1.7% today, and that was following up yesterday's 1.8% rally. So we've gone, 3.5% now, really quick in the opposite direction, almost as quickly as we were selling off Friday and Monday. We are recovering those gains now in the immediate, Tuesday and Wednesday following up that sell-off. So let's take a look at the levels here. A lot of interesting things have sort of happened here. Let's just jump right into it. First, the damage that we suffered technically here Friday and Monday was significant, but we are quickly trying to repair that. And the interesting thing I'd say about yesterday was we gapped up to essentially the open of Monday, so that was already impressive, kind of keeping any late shorts out of this, really in some immediate pain, basically. If you were going out here shorting the markets on Monday, you were feeling pain immediately on Tuesday, and we just continued to rally. We closed at the absolute highs, right? That's a sign of strength. Now, of course, we all know the cliche or saying, and for good reason, the most violent and the fastest rallies tend to happen in bear trends, bear markets, and arguably this could still be this could be that situation, absolutely. But a second day of a consecutive gap and a close, I'll call it at the highs, a slight wick on there, but basically a second follow-up day, reclaiming this important horizontal support and closing near the highs, strong breath back to back, is very constructive. It almost has that V-shaped feel to it, which, V-shapes are sort of the exception to the rule. They're not what usually happens, but they can happen. Take a look at what happened here back in February of earlier this year, and just take a look at the gap higher, close on the highs, the next day gap higher, close on the highs, and this is the 2015, February 15th, February 16th days is what I'm referring to. Certainly circumstances are different, but just take a look at what that price action looks like, and just take a look at where we are now. So I think the weekly chart shows an interesting picture, right? This is the major support here, this 203.50 area, and you can see we really did flush below this level. We really did kind of trip up all of these stops, take out all of some of these weak longs, suck in some shorts, and then very quickly pivoted and just are heading higher right now. So I think the weekly chart shows the best picture. Now remember, the weekly chart's not over. We still have 2 more days of price action. So a lot can change between now and Friday. I think we're just at a very interesting spot. Notice though, going back to the daily chart, here's what has me concerned. Now, on the bull side, I like the speed and magnitude of this 2-day rally. I think it's very impressive. On the downside, though, notice we are rallying into declining 8 and 20 period moving averages, which are bearishly aligned. That's not, that's not something that is constructive and generally is not a favorable spot to start putting on new longs. You could also draw a retracement, fib retracement from here down to here, this swing low that we had for these 2 days, and you can see we're basically at the 61.8% retracement. You can see we're at the entrance to Friday's gap. So we do have just a lot of things going on here. We have speed on the upside, but we also have technical damage and declining fast moving averages. So it's just going to make it for a difficult, very murky situation, right? We can easily just continue higher V-shape, fill this gap, and we'll be quickly talking about all-time highs again, or this could be a brilliant bear rally and we're going to swiftly come back down. Now I think I have this little arrow drawn here because I think 200, SPY 200, these 2 pink arrows right here, that's your kind of oh shit line in the sand, right? I mean, if the market starts to break back below 200, that's when you just need to kind of get really defensive again, right? So if you're depending on your time frame, trading against SPY 200 while it's 6 points away now is probably a decent, or at least a spot to manage risk against. So a few different levels there, SPY 200, and then if you want to keep things really tight, and this is actually really more what I'm looking at, is this 203.50 level, and effectively this gap. If we can hold in here, maybe fill the gap, but hold up after filling that gap, I think that's also very inconstructive. But it's tough to say. It's been a very sort of emotional 4 days here. You can see just how quickly we V-shaped down, but I do like the fact that we have reclaimed support. Now, for me, I was traveling all yesterday, so I didn't get to participate or really take advantage or make any moves here on this 1.8% day we had higher. Now, maybe I would have put on a little bit of exposure. Chances are that would have been the case. But as someone who came in, I came in long today, but not so long, mostly in the defensive areas that, aren't so risky and aggressively long. So as someone who really didn't have a lot of exposure today, I certainly wasn't very interested in just chasing, today's gap higher. And on the close, I still don't really feel comfortable chasing. So as much as I may be skewed slightly to the positive side here, just based on the speed and magnitude of this bounce, I'm not really participating in it just because I haven't seen a good spot to jump on board. So that's the way I'm looking at it. We are long, but it's more in the defensive side, gold, the miners, utilities, those types of things that aren't really all that exciting, and the exposure is still minimum. So that's the way I'm positioned. That's the way I'm looking at the market right now, and I think it's very interesting. Back to the weekly chart, you can see, now just 3 points away, back to 209 here, getting to the top end of this range. If that happens, fill the gap, and we'll very quickly be talking about all-time highs again, and coming off of a very emotional flush here, which maybe does eventually cause the catalyst to break us out to all-time highs. All speculation. That's the way I'm looking at it. Now, this video is already running long, so let's just go through the IWM real quick. You can see it came all the way back down here, 108.50. This was prior support. This is where we bounced, and you can see we're bouncing again right into this declining 8 and 20 period moving average. You should expect some struggle there. If you look at the Qs, very similar. We washed out below this trend line right here, and then we're bouncing back into some of those declining trend lines. So that is the landscape sort of all around. There's something for everyone. The action's pretty quick, and I honestly would not be surprised to see us, gap up, 0.5%. 1% tomorrow or lower. Really, it's just it's one of those sort of environments. Again, I want to point your attention to maybe the close of the weekly chart, which is going to be important. Can we hold on to the highs here, or do we start fading back down and coming back down and closing, below 203.50? That would get me incrementally more bearish. Now, let's take a quick look at some of these other markets really fast. TLT, very impressive series of gap higher, but you can see a little bit of perhaps exhaustion up here, coming back down to close right at this gap from Monday. Let's see if it continues to fall over. Still, though, momentum extremely skewed in the bulls' favor here, so it's a tough short in my opinion, but I'm sure there's many that are going after that. After today's close, gold still hanging out near the highs, hasn't really broken out to these new highs yet, hasn't been able to clear Monday's highs, but still hanging up 8 and 20, still pointing higher. Silver, very impressive, closing on the lows, but still you have to respect this. We talked about this inverted head and shoulders pattern here last week, and you can see it's starting to happen. We're above the $17 neckline. The chase is on, the momentum's higher, so let's see how that shakes out. USO, we got stopped out of this today. We were short USO. We were short it from last Friday. We did manage to cover partial here on the lows on Monday, but the majority of our position was stopped out today. Just a lot of strength here, and this certainly helped fuel some of the rally that we saw today. It did get back above this horizontal support here that I was looking at, this 1160 level, and you can see it's trying to battle to get back inside this subjectively drawn trend line. But be that as it may, there's still enough strength here. It's not rolling rolling over. We didn't see that immediate rollover. So USO range bound, choppy, probably, I don't know, it still looks like it's a tough trade right now on either side. I could make a case for both, but for me, the momentum, the strong kind of downside momentum that we're starting to experience early this week, Monday, starting to quickly evaporate, especially with that hammer and so on and so forth. So flat USO, locked in some profit, took a loss overall in the position though, flat on it. UNG continues to work higher. Yesterday, very impressive 4.5% up move. Today, giving some of that back, but still very healthy. Again, momentum very much skewed to the bull side here. Could you argue it's overstretched and it's gone too far? Sure, but there's been a clear change of character going all the way back to June, basically earlier this month, and again, I wouldn't want to bet against that at this point. So I think that's it. I'll just call it there because I do want to make sure I can try and get this video up. Thanks guys for watching. I will catch you next time.